Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show, episode 179. Today is April 11th, and AJ, I'm very thankful to have you out here keeping all of us investors at calm because it may be one of the wildest weeks that I've seen as an adult investor. What are your takeaway? Where do you want to begin today's show? The tariff war. What do we call this era that we're in right now?
Well, I think as far as our trading folks are concerned, Sip, you know, I, I I am a pattern analysis guy, a technical analysis guy. You'll even catch me checking out fundamentals, but I think we all need to change our focus onto the tweets and the social media because that's what has been driving the market. I mean, the bond market, we're going to be talking about this with our special guest, but the bond market finally spoke to the White House, I think, because the 10-year Treasury bond started to jump up, which basically means that folks were losing their belief in the U.S. dollar, right? They were, or should I say, the whole U.S. backing of the dollar. And so that's when it finally got the attention of the White House, and they decided to abandon, at least postpone, the whole tariff war. Except, still record number of tariffs against China, and the automakers are still hitting tariffs. There's still 10% tariffs across the board, but all those crazy tariffs we heard about last week got pulled back. The market rallied. Of course, now there's doubt. Who knows what's going on? Yesterday and today, I'm seeing a lot of doubt. I mean, the damage might be done. I don't know. What do you think?
Well, I just pulled up your S&P chart because I think, it's a tale of two headlines, right? And it was just the beginning of the week and just the extension, right? We had Liberation Day. Oh, Liberation Day. And the market didn't really like that. And then, like you
Absolutely.
said, the bonds kicked in, and
Yeah.
then it really was like a midday thing. And I even sent you the tweet where it was like Trump went on his own social media platform and said, I think it's a great time to buy. And then
My
2 hours later,
goodness.
they extend the tariffs and the market rips, right? You're pointing to the green. I mean, that's like a 10% move to the upside in what, like 2 hours?
I don't even want to point out the egregious insider trading. If any CEO had ever broadcasted on their social media that it was time to buy stocks and then had an earnings announcement or pulled a big lever the way that the White House did, oh my God, that is egregious. But hey, he runs all the aspects of government, so who's gonna catch him on that? But man, that was egregious in my humble opinion. I just don't think that bar would be put. But that all aside, yes, the bond market was speaking, and the bond market is where steady money is supposed to be. So when the bond market speaks, I guess you can ignore the equities market to a certain degree. But when the bond market speaks, and the whole thing that he was elected on was reducing rates, whether it be rates at the grocery store or mortgage rates, and everything is keyed to the 10-year Treasury bond. So if the Treasury, the yields go up when people are not interested in buying the bonds. Now today and yesterday, the bond market kind of showed some strength. There was a good auction of the 10 years, so good. Reemphasize the strength. But man, when people don't want to buy U.S. debt, that's a clear sign that hey, you're on the wrong. And I'm glad they took note. I'm glad they took note. I wasn't sure why. Literally a couple of minutes, maybe an hour or so before pulling that big lever and reversing on the whole tariff, extreme tariffs, the Liberation Day tariffs. Why anything possessed him to talk about buying stocks? But okay, we'll go from there.
And I'm curious because are you having your members this week asking you what they should do? Because I know over the past couple of episodes, we've talked about this VIX trade that you're pulling up, which is a good way to protect yourself in an uncertain time like this. And if we go back a couple of weeks, even before these big bars were jumping up, we were talking about the VIX trade. This is something that you constantly put on as protection. And now we're seeing numbers that we haven't seen since like
The pandemic.
the .com crash, right? Things like
Well,
that. And so are you getting requests about, what I should be doing? Because, and I was talking with our special guest before the show a little bit, because I was seeing portfolio. People are going on Twitter and they're like, I'm down $10 million. They're up $10 million. And it's all based off of the decisions of one man, right? Like the market, this isn't an economic thing, at least not so like fierce.
No, this isn't organic by any means. This is actually, this is completely manufactured. But with that said, the scoop is we don't want to be chasing, especially bears dropping out the window. One thing, we commonly say the bull climbs up the stairs, which means people put their money trepidatiously into the markets. And then the bear jumps out the window, which means when the proverbial poop hits the fan, people take their money out very quickly and go bury it in the backyard or sew it into their mattress, right? They don't just take it out as slowly as they put it in. But we also say, as a corollary, that the bear hits the floor pretty quick, almost unexpectedly, which means a lot of times the end of the bear drop happens quickly. So you don't want to be chasing that bear, right? We actually got signals. If you take a look at our indicator that anybody can go and download for free, right? Our indicator gave us a signal, about a week and a half ago, and that was the time to kind of jump in on any of that move. At this point, chasing that bear could lead to trouble. Almost what we want to do is start buying into some swing trading, which means we want to let the market become, range contraction. We want to let it become a little bit on the overbought side, even though there's this now downtrend that has matured, and then take the next swing down if one occurs. And so there's a couple of signals that have to line up consecutively if we want to trade the next down move, but don't be chasing something. We always in trading say, we set up trades in times of peace, not in times of war. When you set up times of war, which basically means you want to, get ahead of the pattern, not try to follow the pattern, because a lot of times when you're following the pattern, the money that moves the pattern is already getting out and leaving you in a pole position, which I think a lot of, we call that almost like a pump and dump. It's where a whole bunch of big money investors do something which moves the market enough that little investors try to jump in behind them, following in their footsteps, only to move the price in the direction that the big money investors wanted, and then the big money investors pull out and get that profit, leaving the little guys to then, deal with what's left over. You see that a lot in those meme coins right now. You're seeing that a lot in the market with short squeezes and a lot of that stuff. But just watch out about chasing. What we want to do is kind of think it out and be a little bit more strategic.
It's like I gotta set up my Truth Social notifications to let me know anytime the president says anything, because one statement can move the market 10%. And we have, I have a nice tweet to kind of represent these feelings, and it's our text on, text off, Mr. Miyagi, right? This is kind of what it feels like. 10%, 32%, 104%, et cetera, et cetera. But the fact is, it is having an impact. Here's another chart I saw. An uncertainty index has exploded under President Trump, almost doubling that of the COVID pandemic, which you would assume a global shutdown like that would be more uncertain than an almost 80-year-old guy with Twitter fingers, dropping knowledge. All right. So we've got a lot to cover, and we have a really good guest on the show that can kind of help us give us some insights, because he works with a lot of, invested people that have a lot of money in the market. And
Right.
I'm curious to know, what his conversations have been like this week, because
Absolutely.
I'm seeing the portfolio swings left and right. And
Mm.
on the show here, we always talk about, well, how can you protect yourself? And we use options as one of those tools, one of the, 28, 29 different ways to utilize options. And then specifically with premium selling, which is probably really hot now, AJ, right? Those premiums are up there. And the VIX trade has been I don't know, what was your ROI on that estimate? 300 something. It was
Yeah.
crazy, right?
Yeah. 3x return.
Yeah. So we're gonna take a quick break. I'm gonna go ahead and drop your quick links into our chat, just because that is where people can get access to all of AJ's goodies, whether it's the free indicator that you'll see, some of his social channels, some custom coach, some one-on-one coaching, the trading trainer program, and just all the good stuff that we've got. But we're gonna go ahead and take a little break here. Bring in our special guest to talk a little bit more about the markets and get everyone set up for success. So sit tight. We'll be back in a jiffy. 10-4.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ, it's funny because this week I've been talking, because I like to post on social media about the market stuff. I posted one yesterday. I was like, did you buy the dip? And a lot of people didn't. And a lot of people don't know that you can make money when the market goes down, right? Everyone's like, oh, the market's crashing. And I always have to remind them, like, you can make money on the way down if you just use the right tools and put the right trades on and stuff.
I get a little bit flustered with some of the news headlines and the talking heads, because they talk about how much money evaporated in the markets. And the money doesn't evaporate in the markets, it just changes hands. So they kind of ring the alarm bell, but yeah, you just have to make sure you're on the right side of the equation. But it also means you have to read the patterns correctly, and that's why I love our special guest, because that's what he looks at. He looks at kind of the broad market patterns, and so he's going to help us make sense of that, right?
Yeah. All right. Well, let's go ahead and bring him on. Special guest Doug Greenberg. Good morning, Doug. Doug is with Pinnacle Wealth Advisory. How you doing, Doug?
I'm doing well today. How are you guys doing? It's Friday, and tomorrow the markets will be closed, so we can all take a break.
The markets will be closed, but the news generator seems to be going 24/7 these days.
What have your conversations been like, Doug? Have you had anybody call you up this week and say, "Oh man, my portfolio's hit. I don't know what to do. Should I take all my money out?" I can only imagine.
Yeah, lots of questions. And I have been a wealth advisor for 30 years, and so many of these clients have been with me through other calamities, market downturns, goof offs by the president, whatever you want to call it. And so they recognize my process and my patterns. And so they're more, the more the questions were around kind of what's happening, not necessarily what we're going to do, because they want to understand why we've got this volatility and why did Trump reverse? What did, as AJ was talking about, what did the bond market tell us? And from my perspective, you made a great point. It's tough to find a bottom in a falling market, right? There's an old saying, don't try to catch a falling knife as that market's going down. Real quick, my experience has been that there's really nothing to do in the middle of that hurricane, okay? Because you could easily get whipsawed. I mean, we could see the past handful of trading days. So until things settle down, until things we start seeing a direction both in tariffs, in the economy, how it's going to affect the economy, what countries are going to be with tariffs, what aren't, right? We're now back to a more normal, what I expected, and I think what what Trump supporters expected was some level of tariffs, but we're going to focus on
Yeah.
China. What's interesting, though, is that China's trade with the U.S. has done nothing except go down. They already have been expanding. I think 37% of what they export comes to the U.S., so it's much lower than it has been in the
Yeah, it's
past.
already been on a movement down, but now there's still a chunk, and there's still a chunk, especially some of the big flyers in what is it, this terrific seven or whatever they call it.
Mag 7.
You
Yep,
got
Mag 7. Right.
I'm thinking
Right.
specifically of Apple, right? I think that the
Mhm.
expertise there to make those iPhones, it hasn't. I think they've been trying to move it slowly, but there's just an expertise in China for manufacturing those. So that'll be interesting. But I guess one of my, and if you have anything thoughts on that, but one of my things that uh, I've been noticing that especially I'm thinking of the first term with Trump, a lot of economic news became kind of secondary compared to the tweet, but it's still important. And this past week, we got the all important consumer price index yesterday, and today the producers price index for demand before this podcast. What are your thoughts on economic news, especially those two that just came out?
Yeah, I mean, I think that with respect to the PPI, we are seeing some effects, but you know, I'll back up. The upside to this turmoil is lower interest rates again before the 10-year popped, and lower oil, lower gas, so things that will reduce inflation. But all the talking heads, to your point, I don't understand why they're so concerned. There's one reason about these quarterly numbers, because one, tariffs were talked about but not in place. But then two, there was a lot of things done by big and small companies ahead of these tariffs. I saw a report that Apple, was loading up planes with hundreds of thousands of iPhones to bring them over before the date started. So how much was pulled, how much was pushed forward? We don't know that. I know we've got bank earnings start today, so it'll be interesting to see kind of what those earnings are, and most importantly, what they will speak of the future. What's their guidance? Because that's important. A lot of companies have said we're not going to give guidance because it's too uneasy, just like they did during
Right.
COVID. Right. So I think we'll see the effects of this turmoil in this quarter, second and third. And kind of one final thought on this piece. Once Trump got the nomination and he was laying out his economic plan, Goldman put out a report and was like, there's a good probability that we could have a recession in the back half of the year, given what he's wanting to do. So we'll see if that's still in the cards. This 10% tariff is still going to whack about 150 basis points off GDP. So we'll see what those forward guidance looks like.
Yeah. What did you think about CPI, PPI?
I think that that PPI, kind of all I got really was just, we had drops in food, we had drops in energy, and core producer prices. And so, I mean, it's a positive move for the Fed's two mandates. But again, I don't know that it matters a whole lot today, given what we've gone through. I was talking to my older son, and I was saying, we could literally take out that market action for these past couple of days and pretend it never happened, right? Just like all the research reports, right? And because now we've had a reversal, it's now a change in direction. So today these matter because of everything else going on.
And one of the things that I noticed is that they're all ticking down, whereas they were stuck for a while. And same with the price of oil, right? It was stuck around $70, $72 a barrel. Now it's at $59, $60 a barrel. Is this maybe too much? Again, you were mentioning the likelihood or a probability or possibility of a recession. When things drop too quickly, are we worried now the other direction?
Yeah, I think that, the way that I share it with clients is, we want to focus on the economy
Yeah.
and what the economy is doing, right? What's going to happen 6, 12, 18 months out. We plan for that. The markets are emotional, right? And I know that they swing too much to the right, too much to the left until they center back in the middle, right? And whether that's the VIX telling us that, right? We're now back at
Yeah.
15, right? Instead of being at 40 or being at,
Yeah.
but this whole market is still run and managed, and decisions are made by people with
That's right.
hearts that beat. So program trading, great, set up by a person, right?
Yeah.
And so you still have emotions built in, and yeah, I mean, yeah, it's
Well,
just an emotional market.
why don't you tell us a little bit about kind of what you do day to day and who you do it for?
Right. So, and that's a good question. So, I have an extensive business background. Studied, economics, finance, banking, and entrepreneurship in college, and have been an entrepreneur my whole life. Started in this world, and continued that passion for helping business owners. So, I work with founders and business owners, and helping them make better decisions around the money decisions they make. Growing a company, do we raise money? Do we sell debt? I help them manage their investments. And so on a daily basis, I manage 4 different models. They're all risk based. They all have the
Mhm.
same ETFs, and I think there's 14 or 15 in the portfolio. They're straight down the middle of the fairway. They give about an 80% on the upside and about 50% on the downside. The most aggressive one right now is 70% stocks and about 30%, 25% bonds,
Okay.
that I locked in at the beginning of the year. And so on a daily basis, I'm monitoring those ETFs. I think what's unique about using models is that I have a subset of investments to watch, which is, let's call it 15 ETFs. Most advisors in my seat have a couple thousand positions that they've got to manage. So it's a much more streamlined, I'm much more on it. And so monitoring these, understanding sector moves, understanding where the money's going, both in the fixed income and the equity market, gives us kind of breadcrumbs as to where the momentum's going, to where dollars are flowing in those sectors. So that's very important. This afternoon, I scheduled a call with the founder of a business. We're interviewing some investment bankers. He wants to raise some money by January 2026 to continue the growth in his business. So I'll work on that. I got another client that I'll be helping, do some financial planning. We're going to review the data and then work to understand what they're looking for in the plan or in their life. So it's pretty varied. And then this afternoon, I'm going to a happy hour with a launch of a non-alcoholic THC beverage. Right? I want to meet the owners and hear what's going on and see what kind of help they might need.
So there you go. In these
Uh,
difficult times, this is when you bring yourself onto the board. You need somebody like you.
I do have a question for you, Doug. Because of the tariffs affecting certain manufacturing or certain industries more, are you starting to shift your ETF focus? Because AJ, I believe we were saying that energies might be something that's a little bit more consistent because they're not so much affected. What are your thoughts on like some sectors?
Right.
Great question.
So yeah, that is a great question. And so here is, I think, the difficulty in this period. So AJ talked about tariffs on the automakers. Okay. Well, I shouldn't say I know because that's wrong, but I bet that a majority of investors don't recognize that if the auto vehicle makers and the auto parts that are going between US, Mexico, and Canada, if they follow the trade agreement that they have, there are no tariffs. So what that points out is, and then I think I just saw a news report that Apple is going to be spared tariffs. So the thing is that when Trump says, "Oh, I'm going to put tariffs on this country," right? It's just not a blanket tariff on everything that they got. So I think what really is the difficult part is understanding what's got a tariff on it and what doesn't, right? And that's hard. And so when I talk about this settling process, right? All the investment bankers are doing the same thing, right? They've got their massive spreadsheets. They're adjusting their numbers. They're trying to understand, does this widget have a tariff? And if it has a tariff, how's it's going to affect its sale, right? And just all the way down the line. So
It's funny.
I'm not yet at, what do I do or where do I go? If I do anything, because I had just changed the portfolio in January and added some bonds and took energy out. So here's energy, right? Clearly energy's down because of the concerns over global growth, number one. Number two, Trump wants to pump, right, in the US. We don't know what the Saudis are going to do. Are they going to increase production to make more money at lower rates? Or are they going to, wait and try to push it, squeeze it, try to push it up? We don't know. So it's a tough space to put all the chips on today and right now. Although it's a great buy, I think energy would be a great buy today for, a good year and a half out. But it depends on someone's time frame.
What about gold? Do you think gold still got legs through the rest of the year?
Man, I am blown away by gold. Right, I have a client who's a gold bug, and he's like, I gotta buy gold. I'm like, okay, we'll buy gold. So we bought gold. We bought gold in Berkshire, and he's just as happy as could be. And he bought gold because it's shiny, right? Which I just love, right? And nothing he did is going to hurt him, right? So, it's interesting. I've never been a gold bug. I do recognize and understand, the hedge on gold. But I just don't have a position on gold. It's kind of like the Bitcoin thing, right? Bitcoin has no earnings. It's not correlated to anything. How or where do you think about it in modern portfolio theory? That's how I'm trained, right? So,
well,
what's interesting, we had a guest last week who deals in gold, and then interestingly enough, I was at our local Costco, and the first thing that was presented when I walked in the door was the ability to buy gold bars through Costco.
no kidding.
Oh yeah, and they were very close to the price of gold, and so my wife and I bought a couple bars, and when we used our Costco credit card, so we got 3% back. So I was like,
Nice.
oh, nice. But yeah, I'm gold's interesting to me, and I'm more going for the GLD ETF than I would be bars of gold. But I guess we've got a couple of bars in our safe now, so there you go.
Yeah, I mean, I think, the gold bugs, own gold, right? They own coins, they own bars, they probably also own some silver, as well as GLD. So, those that own it believe in it, and are pretty much focused on it.
Yeah. Again, I hate to be buying something at such a high price. I'd rather buy on the dip. So interesting. Go ahead.
So,
Sip.
so Doug, put yourself in the shoes of some of our members, right, who have been part of the training trainer program, whether it's 4, 5, 20 years. Some of them have been 20 years. Or looking at, I got the S&P chart here, looking at, the rest of the quarter, maybe the rest of the year, what advice would you give them? Because, we here try and minimize risk using the tool of options. Is there anything else that you could add, from your perspective and some of the things that you're doing?
I have a client that has cash, and I was building this morning a treasury ladder for her, right? A 2 to 5 year treasury ladder, because she doesn't want to take risk. I think options are great, right? Again, following the strategy, you just want to buy value in those options. And the other, of course, thing is diversification. And a point about that is when we have, you build a portfolio, right? You've got different investments. They all have different risk return profiles. They provide diversification. They're either, you know, they're non-core in reality, non-correlated to each other. But when we have a market meltdown, all correlations move to one and everything goes down. No one wants to own risk. You know, so that makes that catch a falling knife difficult, you know, to perform and figure out which one's going to bounce and come back up. But a diversified portfolio is important, right? Understanding where you think the economy is going is important. And maybe bouncing your ideas off somebody just to see, you know, that you're not operating in a tunnel. I think that's kind of the most important. And AJ, you provide a good setup for all that. But you know, when you talk about charts, I'm going to share my screen real quick. Share screen, and we're going to do. So we can see this, right, with the two lines.
Yep, we're on that. We're up here now.
Right. So what I want to look at is, you know, I'm a firm believer that that this issue started back in 2007 and 8. We had that zero interest rate policy, and then you know, we saw markets just rocket, continue to move. This is that trend line. And so the question is, when we have a COVID, does the market overreact? Right? If we spend time above the trend line, we got to spend time below the trend line. Should this have occurred? Should this have occurred? Right? Same with this. This is COVID money right here, plain and simple. Here, the Fed says we got to start raising rates. We're going to start raising rates in March. So the market started to sell off until March came along, and then it, you know, I mean, it just kept going. And so again, you know, then we had Silicon Valley Bank, more money into our system. So, you know, if we spent time here, we spend some time here, we spend some time here, we got to spend some time here, down here. And so I think it's just understanding, you know, where the market is, and how it affects your trade, short-term or long-term is just important, right? You just got to have your eyes wide open.
And I brought it up before the show. I was like, Doug, I've never seen this many 1,000-point moves in a week. And you were like, hey, you know, we got to look at the percentages. And when you bring that chart up, it really does kind of help bring it into perspective.
Yep.
I mean, the things I did, I took that off too, is to get them to understand the magnitude of this move versus what else has gone throughout the, you know, the past. And so, you know, here to here's a big move. Here to here's a big move, right? I mean, here to here's a big move. I mean, you know, you have these other moves that were not as public or as intense as the tariffs, but interest rates going up crushed the market. I mean, you know, COVID crushed the market. 07, 08 crushed the market. 07, 08, S&P was down 50%. You know, so dropping, you know, 17, I was expecting another 8 on the downside. We still could have another 8 on the downside to fit the trend line. It'd be down 25%. Just because we bounced, that doesn't mean anything, right? We still have a lot of turmoil and a lot of volatility to go, in my opinion.
Well, everyone keep their Truth Social notifications on because we don't know what's going to happen next. So that could be definitely a driver. All right, Doug, thank you for your lovely insights. We got to keep the show rolling, but we'd love to keep you on and get some insights on some of your names, on some of the names that we're covering. Like you mentioned, AJ does have an amazing community. You know, that he meets with every Thursday, I believe. And from that Thursday meeting, we come up with some names. We come up with some opportunities, whether the market's moving up, moving down. You know, the beautiful thing with options is your ability to take advantage of up, down, sideways, no movement, volatility, no volatility, etc. And so let's go ahead and see what AJ's brewing up this week. AJ's pick of the week this week is ticker symbol KMI, Kinder Morgan. You know, I don't even know what this company does, AJ. Maybe we should start there.
Well, Kinder Morgan is a company that I have been trading options against for 2 decades. And what I like about Kinder Morgan is their stalwart, right? They kind of are a place that you can count on consistency. And the strategies that I'm using are based on range bound, meaning that this is a company that's going sideways. You look at their earnings, you look at their dividend, they're making money. They're a company that just works behind the scenes. You don't really often, unless you're watching like an economic show, you don't really often hear about Kinder Morgan doing anything besides earnings, which, by the way, is coming next Thursday after the market close. So I actually don't want to do anything with Kinder Morgan, at least with our option trading strategies, till next week. But it's on my radar, and I want everybody to also have it on their radar because I'm seeing as we kind of and as Doug pointed out, nothing is shielded from the insanity. There's correlation throughout, and you see that also with Kinder Morgan. But the extent we moved from about $28 down to 26. So and it's following that line of support that's been established since about 3 or 4 months ago. So I'm watching this level between 25, 26. I'm letting earnings pass, and then I'm looking for one of my signals, whether it be this lagging indicator here, or you guys know that I love my fast MACD calculated on volume weighted average price. You can go download the indicator. So I'm waiting for my little blue arrow to show up. That would be an end of day signal followed by trading day follow through. And that's when I think I'd either buy some of the stock in lots of 100 so that I could sell option premium in the future against it, make some income, some steady income off of it, and or I could see using a very far out in time, deep in the money substitute option that would act like, we'll incorporate a little bit of leverage. Make sure you're, also adjusting your risk on that. So the one I've picked out is the Kinder Morgan January Leap for 2026. So that means it expires the third Friday of 2026 in January. $17 call. I like that one. It's a little bit more than about 40% of the price of the stock. So not too much leverage, but enough to kind of supercharge this. And then what I'm going to be doing is watching it, creating a little bit of delta. And here's what I want to really emphasize for folks. When there's uncertainty, right, we like to leg into our positions, which means establish the initial covering position first, and then days later, go ahead and collar it, sell the premium, and then use that premium money to buy a protective option. It's called collaring the trade. What you can do when you feel uncertain is put that collar on earlier rather than later. So if you're feeling any sort of doubt, go ahead and put the remember the most amount of doubt is when we go ahead and do what's called a buy right and then put the protective option all on the same day. It minimizes your return, it kind of locks you in, but it creates a trade where they self-adjust. You can go to bed at night and not wake up with a gap in the morning white knuckling things. Everything self-adjusts with the protective option to the downside, the premium getting exercised to the top side. But here's what back to Kinder Morgan. Let's wait through earnings. We'll establish that initial covering position, either buying the stock or buying the deep in the money far out in time call. Once it's got a little bit of asset appreciation under it, put that collar on and let's start the income generating process. That's what I like about Kinder Morgan, especially when times are rough.
And real quick, just the Wikipedia, Kinder Morgan is one of the largest energy infrastructure companies specializing in owning and controlling oil and gas pipelines. I'm assuming they're not so much affected by the price of oil. Doug, any thoughts on Kinder Morgan from your perspective?
Yeah, I mean, I like your strategy, AJ. I think it fits well. When I look at the charts on my side and I see, I add in here, I'll just pull it up. Let's find the right one. Oh yeah. So clearly, right, it's at the bottom deviation line of the Bollinger Band, right? So it's a great place to buy. no question about it. You know, you've got relative strength is down as well, and you like your MACD is off. Again, the question, buying in small lots, spread out to see what's going to happen if we take a leg lower potentially, who knows? But still, at this price, you will see the return to the mean as you have everywhere else. It bounces. And so, getting up here and placing some sort of a call, an option strategy is a great idea. I use for a handful of clients covered call writing on some volatile names. But this is not volatile, right? I don't know what the beta is, but it's not going to be crazy to get in and out of.
Well, those are your favorite, aren't they, AJ? You love the boring. The more boring, the better the strategy.
The better, because I'm one of those people, guys, I'm in my 50s, right? And the scoop is I'm not one of those people who wants to white knuckle anything anymore. I want to go to bed. I want to be able to wake up in the morning, have a, protective hedge in place, never have to worry about if the gap moves against me or not. I like to lock it. I like to use the fact that options are wasting assets, and so I'm selling that premium to those people who are going to be paying top dollar for it, and then within 3 to 5 weeks that premium falls off. Do it again, do it again, do it again. That's kind of my modus operandi. Set things up, set and forget. Let the time work for me in those option strategies. Remember, options, a lot of people think options are just a way to leverage a stock movement, but things affect the option price, like, for instance, time passing by, and also just the overall fear or confidence in the market affects the option price. So we just put ourselves on the correct side of the equation. If things are fearful and if time is passing by, we'll select the right option and we'll be the seller of it. And that's just how we do it, right? And then we have this initial covering position in place. We're just slowly whittling away at its break-even price till we can put on protective options that allow us to have a risk-free trade, only dealing with the dealer's money. Usually that happens in 1 to 2 cycles. So the longer I can hold on to this, the more it just becomes, my fund on steroids. And that's kind of the strategies that we like to play with. So Kinder Morgan this week.
So AJ, I have a quick question. So on KMI, how do you think about your straddle, number one? And then number two, do you do anything in terms of covered call writing, just for some income on some some higher income type volatility?
So that's exactly. So we're not actually going to be doing a straddle here. What we're going to do is we're going to buy the stock or buy that back month option as it goes up in price. That's when I'm going to write my call against it, and I can write my call either against stock or I can write my call against a back month option. So that would be a diagonal. And then at the same time, I'm going to be buying a protective put. So that's my collar, a
Right.
protective put with the strike price down here. So I am selling the call and then buying that protective put. The protective put's 3 to 6 months out. The call I'm selling is usually 3 to 5 weeks out. And I'm just going to keep rolling those two adjustment trades about once a month. I'll revisit it and I'll roll those two out and just keep the process going. Usually we're able to do that about 4 or 5 times on a stock like Kinder Morgan before either we get, protected out to the bottom side or we get exercised out to the top side. So that's kind of the strategy I'm aiming for here, turning Kinder Morgan into my income generator.
Right. That's great.
So I think we're talking the same thing here. This is where we make money on these boring sideways moving stocks.
Right.
Yeah, and I go ahead, Doug.
Well, no, right. And adding that collar is great, and adjusting that's great. Yeah, I don't add that collar because folks, they want to trade it every 30 days, right? They just want to be getting that premium every 30 days. And so again, same but different. Right.
Yep.
And I was going to say that this week is a little bit more exotic, but it doesn't mean that AJ's in and out of those names, because sometimes it's better to be outside of the party where, there's consistency rather than being in it and, catching direction one way or another. And so, we've had our exciting and we've had our dull times. But that's what AJ's looking at this week. Kinder Morgan. We've got 3 names from our lovely folks all around the world that they want to know, AJ, what you think. You might like it, you might not. There might be a play, there might not. But this is just kind of our quick speed round. And so let's go ahead and kick things off with Tommy in Singapore, interested in JD.com. JD, ticker symbol JD. I imagine this might be affected by tariffs.
Oh, you betcha. This is so Tommy. I think that this is a symbol. I see it's in its sideways pattern, and I see what you're talking about here. I see that we've got a bottom signal, but man, Tommy, I think that we've got to do some detailed research into the company itself. We got to be very careful again with these levers being pulled here in the States. I'm not sure. JD is kind of a Chinese company that likes to sell all kinds of things. And I think that they're going to get involved in, even if it's selective by product, I think they're going to get involved in this, and I'm not sure about how they're going to be able to deal with it on a fundamental basis. But I see the technical pattern you're seeing. Let me look at one more thing. I'm going to pull up our options lookup tool. Again, this is something that folks can get access to for free. And I want to just look at some of the liquidity in the options, because remember, if we want to use all these fun option strategies to protect ourselves, to hedge ourselves, we have to make sure that there is kind of an active. I want to look about 3 to 6 months out. I'm going to look at the July options, which would be on the 3-month side. You notice right here, let me get my magic marker out. You notice the bid-ask spread on some of these options is pretty high. Like, I'd prefer to see a nickel or a dime. What this is telling me, Tommy, is that yes, there's options to be bought and sold, but there's not a lot of people doing it. Otherwise, that bid-ask spread would be smaller. The market makers would be willing to, cover the buys and the sells because they know they could flip their trades quicker. What this is telling me is there's not enough activity in the options to make them, if you needed to use your option quickly, buy it or sell it because, it's protected, but it's no longer necessary, or vice versa. You need protection. You might not be able to get your trade filled as quickly as you want. So I've got worries, red flags around JD.com all across the board. Tommy, I see your technical signal, but I might say that there's lower hanging fruit somewhere out there. This is one that would give me agita left and right.
Yeah, I saw something that Trump said they might look to delist Chinese companies. I imagine they would be affected by this. Doug, any perspective from your end?
No, I mean, I think we are reminded in the second term about how Trump operated in the first term. We just forgot, and you have to discount things that come out of his mouth. So this delisting, I can't even imagine, right? But it's interesting. I just noticed that just like the U.S. is doing things to promote trade internally, JD.com is going to spend some 27 billion US dollars to build out that infrastructure internally in China to help people transact and to buy Chinese goods instead of to try to change that whole trade internally, which is what they've been trying to do for some time now.
All right. Well, we'll keep an eye on it. I'm sure there will be some more Chinese-backed names throughout the next couple of weeks. So hopefully that helps you, Tommy. Moving on to our second name. Doug might have some good insight here, just because it sounds like you operate in the Dallas, Texas area. You have a good amount of business there. Sarah out of Dallas, Texas wants to know, AJ, we got anything in Intel? The chips are a hot topic. Ticker symbol INTC.
Okay, Intel. Boy, we really backed Intel with a lot of government money when Intel maybe wasn't the the
Winner.
company that needed the backing. That's my knee-jerk reaction about Intel. We wanted to have them build the whole CHIPS Act. Kind of was They kept mentioning Intel. Okay, I see what you're seeing. I see that we're coming down yet again to this level around $19. So from a pattern perspective, I see also they've got earnings coming up. It looks like earnings after market close on April 24. It doesn't look like Intel, you might feel comfortable weathering earnings. It doesn't look like, but anything is possible this round. So that's something to take into consideration whether you want to play one of our earnings trades that we talk about on Intel with a calendar spread or something like that. Or if you're trying to, just put some Intel into your portfolio, again, like we were talking about with Kinder Morgan, in order to sell premium when it gets up towards the higher price, but then tops out. I could see doing that. So there's a lot of opportunities. Again, in summary, possibly an earnings play, possibly a low in order to accumulate some Intel in order to sell premium against as it goes higher. Um, yeah, I think I could get onto that train, but I'm still, and I like Intel because it is a company that continues to do the everyday. It's not in the news very often. It did get a bunch of money to build some factories local. Um, yeah, I'm not super excited, but at the same time, I'm not super disappointed.
It's like they've been in the background for so long that this is a good opportunity for them to catch up, in the space. Doug, any thoughts on Intel?
Yeah, it's tough to look at that chart and to think that, from a purely long perspective, that there's a catalyst to move this up anytime soon. From what I recall around this name, they made a severe misstep in the direction of the company and spent no time on AI. So they replaced their leader, and just how quickly, I haven't seen research, how quickly can they pivot, right, and begin to make some chips in that area.
Yeah, there's a big storyline there with how Nvidia went the GPU route of the chips, and that's where all the demand came in, and how they became such a huge company. But I think we'd all love to see an American chip company come out on top. So maybe there is some long-term play there. So we'll keep an eye on Intel. All right, our third and last name. I'm interested to see what your guys' take is on this. This is Mabel out of Detroit, Michigan. Goodyear Tire, GT, the auto space. Can this weather the storm? AJ, what are your thoughts?
So I remember, Mabel, you might be bringing this up again because we had this last week as one of our speed rounds. So not much has changed, in my opinion, over the last 7 days, except for if you wanted to do one of our buy rights, just to lock in some premium that's going to get probably exercised, right? We could do like a $9 buy right. I could see you doing that and then coming out on even, you might be able to pull out, and we can pull up Goodyear in our options lookup tool next Friday, right? Monthly options expire for April next Friday. So let's just take a look at what the premium is and do kind of the math in our head. So $9. This was, by the way, this is end of day data, so this is yesterday. 40 cents for premium. So if you think about it, if you sold $9, we bought $9.06. Basically, you then turn around and sell back the 40. You're probably going to get exercised at $9 at a $8.66 premium. You got to factor in commissions. Is that 2 or 3% worth it? Maybe, but I wouldn't be trying to use any of our legging in strategies, because there's just not that much movement between tops and bottoms. It's not consistent. I see it sticking there. So yeah, I could see you doing a buy right on this, but I don't think that I'm going to suggest that you do anything more complicated than that. And if it does appreciate a little bit, you know me, I like to put my hedge on. So I'd, buy a 3 to 6 month output down here at the $8 or $9 strike price if it creeped up to 10, 10 and a quarter.
Saying that Goodyear saw a stock surge after tariffs, potentially benefiting from increased demand for replacement tires as consumers might hold on to their vehicles longer. Doug, any thoughts on Goodyear?
I mean, I just was pulling up. I was trying to put a chart together, and I can't do it as quick as I thought. Between oil and Goodyear, because something like 45% of their COGS are attributed to raw material. 70% of materials influenced by oil prices. So what Goodyear does is when oil prices drop and that margin increases, they take that margin and they take that profitability and then they reinvest it back into their business. So what I was just curious to see is that correlation between oil and Goodyear. To see if there's any sort of pattern there that we could use to make a better decision.
That's an interesting thought. I like that.
All right, Mabel, I hope that was helpful. Yeah, that covers our speed round there.
Doug, having you on board with your longer view and your different perspectives, fantastic. I really appreciate your time today.
Thank you. It's been enjoyable. I like the speed round, and it's been good to hear of your thought process. I'll say in person, okay, because this is the new in person, right?
Doug, we went ahead and threw your website into the chat. So if anybody wants to learn more about your services, they can head on over there. I'm assuming they could reach out to if they have any questions about, some of the things that you do. If they come our way, we'll go ahead and send them your way in that capacity as well. Otherwise, it looks as if, things are a little bit calmer into this Friday, but we'll see. Any final thoughts heading into the weekend?
I think AJ or me.
Doug.
I was gonna start with Doug and then AJ. Yeah.
So I think that if you have the experience of going through market turmoil, or if you don't have the experience, try to go back and look at those charts and understand what's happened around these events. And like I said, the one day 10% doesn't mean tariffs are over. Doesn't mean that the issues aren't over. Doesn't, right? It's just a reaction to low prices and a reaction to what he had to share. So I think you just want to tread carefully and look out those 6 months and go, could we have a recession? And not only should I worry about my investments, but is my house in order? Is my investment house in order? Right. I've got one son who's thinking about, a job change. And I was like, let's talk about that. Let's talk about it. How anxious or itchy are you? Right. And he's like, well, yeah. Okay. So again, a broad, don't be, a broader view.
Awesome. All right, Doug. Well, we appreciate your time. We'll let you get back to business, back to your lovely customers. Appreciate it. We'll catch you on the socials. Thank you again. Enjoy your weekend, sir.
Thank you both. Have a great weekend as well.
Take care, Doug.
Talk to you guys soon.
All right, AJ, continuing on that thought, heading into the weekend, are you going to set up your Truth Social notifications, or are you still just going to operate how you have been the last 20 years as a professional investor?
Well, a couple of things. On Thursdays is when I meet with my premium sellers, but a lot of folks don't know that I'm still meeting with my full-time option traders every Monday evening. And we have definitely been using our bots and trading some of those day trades that have been happening throughout and allowing the bots to trade on velocity, trade on acceleration. And man, I'm going to be completely honest, with my great big portfolio, the majority of it is in premium selling. I put maybe 5 to 10% into those bots, but man, that 5 to 10% has been working overtime. So we're going to keep working with those bots with my full-time traders, with the overall market today may or may not confirm a bottom from April 8th. I just circled it on my chart for everybody. I don't know if we can throw that up really quick on my
Yeah, let's
S&P
go ahead and
chart.
get that in there.
So I want people to look at that, because then we'll be looking to see how far up we get. That'll be kind of that pullback. This is for those folks that have embraced swing trading in the down direction. This is that reloading of the swing trading gun. And so next week may be some opportunities. And again, swing trading, you wait for the pullback. Well, we've been getting that pullback. Again, I'm waiting for that confirmation of that pullback. And then you wait for the reversal, and boom, you take advantage of every time you get range expansion in the downward direction. So this is reloading. I'm waiting for my trigger to get in place. We call it the trigger signal, and then the confirmation signal. Trigger, confirmation, when they get in place, it's time to swing trade in the down direction. So that's what I'm watching, Sip, is I'm watching this whole thing unfold. April 8th bottom, potentially another top, and a swing trade opportunity coming up next week. So that's what maybe next week we'll be talking about how that's playing out.
Yeah, it's like this is a good time to sharpen your tools, right? To make sure you got everything ready in case we have another move one way or the other, and then keeping your risk in place, because I can imagine this week has had a good number of margin calls simply because of the percentage. I mean, like heading into Monday or Tuesday, we were getting close to those circuit breakers, and that doesn't happen too often. So making sure your tools are in order, and making sure you have a community or people that you can ask
Bounce
questions that
ideas
you
off
can
of.
leverage, that you could feel a little bit more comfortable.
Absolutely.
And so once again, we'll go ahead and throw those links to that in the chat. Let me go ahead and pull it up on our screen. AJ's quick links, the options lookup tool, his social pages, the free indicator suite, the free daily options workshop. We did touch on a couple of these covered call premium writing strategies. This workshop link right here is a great place to go learn more about that. And then just, becoming a member, part of the community, and having a group of like-minded people to leverage. So AJ's quick access tool links in the chat. Big shout out to our guest, Doug Greenberg, for coming on, giving us some good insights. And that's pretty much it for us today. AJ, thank you for your time. Thank you to everyone that tuned in. We truly do appreciate it. Hit that, show some love, hit that like, hit that follow, hit that subscribe button. We've got some more videos coming your way this week. I know AJ's been crunching them out. A lot of people asking questions, but that's all we got. That's all we got for you folks.
Bye, everybody. Thank you.
Have a good weekend.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button